and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shail Patnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's midweek and we can see that bear howling is getting even louder. We've breached 23,600 on the downside now. The Nifty is down by nearly 300 points, 1.2% lower. The Nifty Bank is now down by over 800 points, a 1.6% downtick. The Sensex also down by over 800 points as well. All the sectors are down in the red, with the Realty Index down 3.5%, losing the most. Only 3 stocks remain in the green on the Nifty, namely NTPC, Britannia, HUL. 47 stocks are down in the red. And the Nifty, meanwhile, has now entered a correction zone. It's down 10% from its record high levels of 26,277. Where do we go from here is something that we will understand from our market experts who will be joining in on this show. Good afternoon, Shail.
Good afternoon, ladies and gentlemen. As I was saying early morning, the 13th number will be acting up today. And there you have it, 23,581. The 200-day DMA will be tested as we had postulated early morning. And it's not looking good at all. All 19 indices are in the red. The losses are being led by the Realty Index, down 3.6%. Remember, Realty is a play on possibly a cut in real estate indexes, real estate rates, interest rates, which was put to rest yesterday after that massive inflation jump that has seen. Therefore, the correction is the most massive there. PSU banks 2.8% lower as far as the index is concerned. Small cap index has been taken to the cleaners, almost 3% down. And only 5 stocks out of 100 are in the green. You have losses on the Nifty mid-cap index, 2.5% down. Only 4 stocks out of 100 are in the green. And in NSE 500, down 1.8%. 28 out of 501 stocks show a move towards the green side. So, 2 things have happened today. The 10 percentage point correction happened at 23,650. The index bounced a bit from there to about 713. And from then on, it's the call writers that I remind you of a daily basis. They have become extremely active, and now massive call writing is seen on 23,700, 23,600, and they are pushing the Nifty towards 23,530, which is the 200-day moving average. If you look at the advanced decline ratio in the FNO space, actually, only 7 stock futures are in the green versus 171 which are in the red. So massive selling pressure coming in. And in terms of what are the stocks responsible for this 300 point cut on the Nifty, well, let me just share some names with you. There are HDFC Bank. Yesterday's 1.7 percentage point, yesterday's 2.3% cut is followed by today's 1.7 percentage cut. 33 points in Nifty's red color are because of HDFC Bank. ICICI has contributed a negative 28 points, Reliance 21 points, M&M 25 points, and Sun SBI about 17 points. Only 3 stocks, as Sakshi very rightly says, are in the green on the Nifty. 3:47. Another way to look at it is that how worse can it get? But as they say, that pain comes in stages, and this is how it is. A very sharp fall coming in on a day when Bank Nifty bids us goodbye on the weekly options format. It's the last weekly expiry ever for Bank Nifty, which itself is down 1.8 percentage points. My assumption is that you'll see a 1,000-point cut on the Bank Nifty today, 50,220. So 200-day DMA on the Nifty will be tested, and 100-day moving average on the Bank Nifty is now with the bulls. Ladies and gentlemen, it gets worse and worse.
Right. Let's welcome Prashant Tapsi, research analyst at Mehta Equities, to now be with us on the show. Prashant, tell us, how are you looking at this bleeding Wednesday, so to speak, and tell us, is this being seen more as a falling knife, which we do not know how sharp and how much more will fall? Or do you really see this as an opportunity to invest in or get into the markets?
Last 45 days, this opportunity is showing us a new dream for every day. But every day, next day, tomorrow, we are seeing again 200, 300 point cut. So the dream is still far away. Delhi abhi dur hai. And then technically again, yes, sir said about the 200 DA DMI. I think it will be tested. And it's a crucial level for Indian markets to watch. And there may be some kind of more selling pressure if that breaches and closes below 200 DMI. So overall, the sentiments are bad. I think three, four, multiple factors. One, FIS selling continuously. Second, earnings are not disappointing. There will be more downgrades in Indian, quarterly earnings. Again, fourth would be yesterday's headline of inflation, which is again growing very faster. Food inflation is very high again, and the expected rate cut by RBI again. It has been now the book is closed for again January or February. So I think everything is negative in 360-degree. So we should wait for good news from markets that can come from Maharashtra election, that can come from again Q3 earnings expectations. But time being, stay away. And traders and investors are not finding any place to hide right now. Any stock they are buying today, they are getting at 10, 15 rupees downside next day. So for me, it's a wait and watch. Nothing to hurry and jump into markets.
Right. One point I'd like to mention today, Sakshi, in this absolute mayhem, it's Swiggy. And against all hopes, here is a counter which is rock solid. 13.5% higher, ladies and gentlemen, on its listing day. 4,100 crores has been, how should I say, achieved in terms of turnover, making it the top traded counter in the market. Lots of talk in the market that this selling that we see in the secondary market is finding itself into Swiggy. Only time will tell. This is of course not an invitation to buy. And when you look at gain on Dalal Street, look at pain. Acme Solar was also listed, an equal 12.5% down on Acme Solar on the first day of its listing, down about 36 rupees. 253 is what we see on Acme. Yesterday's listed stock, Sagility, down 3.5% again, 28.25 as far as the price is concerned, and it's almost a sharp bounce from its intraday low of 27. So keep an eye out on Sagility. A good quality management, very good price, but it's been sort of massacred because of the way the secondary markets are. Sakshi.
Okay, the top mover right now on the Nifty is NTPC, and remember viewers, we've marked out for you that how NTPC Green Energy IPO will be hitting the street on November 19, and this is a 10,000 odd crore rupee IPO, the third largest IPO of the year, with over 10,000 crores of a size, after Hyundai Motors and Swiggy will be hitting the D street as well. And the price band has been fixed between 102 to 108 rupees per share, and you can actually invest in lots of 138 shares, with the minimum lot of 138 shares right there. How are you looking at NTPC right now, Prashant, and what do you think as the opportunity NTPC Green really presents?
I think yes, power as a sector, we are very much bullish on the sector from last 2-3 quarters, and the way how energy as a demand is going into India, and I think 5 to 10 years there is a good story building up in energy. The way how a lot of energy companies are doing well, I think NTPC is also doing well. NTPC and Green, the subsidiary of the NTPC, will also do good. But yes, considering the market conditions, the opportunity is really good to accumulate NTPC, the parent company, which is trading at 380 rupees right now. And based on the valuation, again, NTPC Green is also looking good for a long-term investor.
Okay, got it. So that's as far as NTPC is concerned. Let's look at the markets clearly. Real estate index is now down almost 4%. That's the one which is facing the deepest cut today. PSU banks are now down 3.2%, over 3% cut even for the metals. And small cap 100 index has also now lost 3%. Mid caps down 2.7%. The broader markets are really facing a lot of pain right now. And whenever these deep cuts come in on an intraday basis, it's the broader markets that feel even more deeper pinch. Your sense on the mid and small caps, how are you looking at these two spaces right now, Prashant?
I think in the last 1 month, mid and small cap have taken the bigger hits, almost 25 to 30% low from their highs. So one big thing is the earnings are not suitable for the price rise which has happened last 1 year. So that is why the stocks are getting crashed down from last for 30 to 40 days. So earnings should be the major thoughts one should look at investing in any of the mid caps and small caps right now. The way how margins are getting constructed, the way how the EBITDA and PAT margins under pressure. So I think next 1 or 2 quarters, these stocks will be really seen very hard way to come up. So one should avoid right now, and one should go on the long, the big caps right now because they're comfortable are more in terms of valuations like large caps.
Okay, that's how it is. And I just mentioned 5 minutes ago, you'll see a 1,000-point cut on the bank Nifty. That's happened as well. 50,000, ladies and gentlemen, will be at risk today. Just 100 points away, and you just might see a digit change on the Nifty bank for the worse. That is how it is. 2 percentage points lower, and today's FIN number most likely will exceed maybe 4,000 crore rupees, but some of the net sales that they do will be translated into Swiggy as well. So let's see what the overall number is, but all FI favorites are seeing heavy pressure, which is Reliance, HDFC Bank, ICICI Bank, State Bank of India, intensely liquid counters, and these are showing all signs of pain. Let's look at the fact that is there a record high in the market? I know it's almost impossible to think that, but an all-time high, well, none. Top gainers, most certainly. You have some real quality stocks that are doing phenomenally well. Among them, Suven Pharmaceuticals, 3.6% higher, 1248. You have Zydus Life. It's mostly pharma. Let me just give that a sectoral feel. So you have Suven Pharma, PPL Pharma 2% higher, Zydus Life 1.5% higher, Alchem Labs 1.2% up, and of course you have stocks like Blue Star, and maybe to some extent even Havells that are showing signs of a modest uptick. So it's not as if that all is lost, but for the moment a nice test of the 200-day moving average is seen. My understanding is that you might just see a test and then a nice intraday bounce. Let us see. The index is at its lowest, 23,552, and what you see as 23,552, ladies and gentlemen, is the lowest that we have hit on 11th of June. So it's an 11th June low. We are on 13th November. 11 minus 6 is a 5-month low, and never has the 200-day DMA been violated. It was tested, Sakshi, on a day when you bought the ETF, which is June 4th, the election results day, and before that on 26th of October 2023, and it was breached earlier in let me just pull this out, 10th March 2023. So that's how it is, ladies and gentlemen.
Okay, got it. Let's look at the broader markets and see where the pain is emerging. A lot of stocks that are down in high single digits and in double digits in trade today. So Acme Solar, as pointed out by Shell, 13% lower on its day one. Suprajit Engineering 11% lower. Greaves Cotton is down 11%. You have Nahar Spinning, that's down. STC, Street Trading Corporation, down almost 10% in trade. Suzlon, that's down by 8% at 54.6. You have Borosil, that's down 8.5% as well. Then some of these stocks are sharply, Copran, that's down by almost 17.8% in trade. Sharp fall that is being seen. On the other side, what is still pulling up or holding up in this weak setup in the market? KNR Constructions. Remember, the earnings came out very well, and 8% uptick is what has held on as far as KNR Construction is concerned right from the morning trade. Vimta Labs is up 6%. You have McNally Bharat Engineering Company at 5% higher in trade. Then Kalyani Forge is up by 5% in trade. Swiggy, of course, has been discussed. These are some of the stocks that are actually doing very well in an otherwise extremely weak setup in the markets. It's India Wix, that's the only index that's in green, 7% higher, 15.5 at the current levels. If you to look at the green, it's India Wix. Looking at the volatility index, do you see some more uptick now coming in and ghosts of the past returning to the street in terms of Wix? Prashant?
I think yes, there will be a lot of volatility, and on the risker side, the way how markets are getting into pressure and touching the 200 DMI, the VIX will obviously, I think it will go near to 17 or 18. So that would be a level where markets can be, very much near to bottom. Above 18 again, there will be good kind of recovery seen in the markets. Historically, we have seen it. But yes, one should wait and watch for a closing below 200 DMI, which I think perfectly tested today, 23,545, which was the level of 200 DMI today, and it has tested and just bounced back 20 points from that levels. But overall, it's a wait and watch, nothing to hurry. Overall, one should focus more on looking at the good stocks which are getting at a discounted rates, but not hurrying to buy out today only.
Okay, got it.
250, ladies and gentlemen, slowly but surely, 50,000 on the Bank Nifty will also go. And let's see what's the main pain point. I'm sure it's HDFC Bank, a 1,000-point cut on Bank Nifty. Let us see what are the contributory stocks in this. All 12 are down, and HDFC Bank has contributed a negative 415 points, ICICI Bank 210, SBI 124. HDFC Bank has 38% weightage in Bank Nifty. ICICI Bank has 26% weightage. Both put together 14 or 5. 64% is by HDFC and ICICI Bank put together. And together they have pulled down the Nifty Bank by 625 points. Overall, 1,087. And you know what? Even the Bank Nifty is going to test its 200-day moving average, most probably today, which is at 49,900. That's how it is, ladies and gentlemen. The 13th day of November is turning out to be super unlucky for stocks. 1,100 points down on Nifty Bank now. It's only a matter of time before 50,000 will give up. And again, this correction is now worth 4,376 points, or 8 percentage points on the Nifty Bank. It's taken exactly 48 days for the index, my apologies, 33 sessions for the Bank Nifty to correct 10 percentage points. And you'll just see in a matter of time that 50,000 will be taken away by the bears. Sakshi.
Okay, got it. So that's the overall view that's coming in. Prashant, let's get you to talk about some of the spaces where buying is coming, and that is in the FMCG space. That's the index that's falling the least among all of those that are down. It's down by about 0.4%, but even does have some winners like a Britannia or an HUL or an ITC or a Godrej Consumer Products. These are the stocks that are still holding up. Do you think FMCG is a good place to hide in this sell-off in the markets?
As a sector, as an index, I think it has gone oversold position. I think that is the only reason why the money is flowing into the defensive stock, that is FMCG, and even the pharma stocks. So, but in the FMCG space, I think ITC should be better placed. I think 270 or 270, 470 or 475 can be a good level, for a small trader to catch this opportunity in these markets. But overall, again, the trend is very much negative in the broader market, which will keep again tomorrow markets will be under pressure. So that will again keep the investors or traders to sit away and then wait and watch. So for me, if a risky trader want to bet, Britannia and IDC can be a first trading opportunity to catch up.
Okay, got it. So that's the FMCG space for you. Only two of those FMCG stocks now holding up, Britannia and HUL right now. Okay, but if you have to really look at the sectors and where you will actually see the first turnaround happen when the markets recover, which sector do you think will that be, Prashant?
I think the mother of all sectors should be bank, and the bank should first see the first recovery, and then SBI, HDFC, these two stocks should give some kind of positive triggers in the markets. Because if something is going positive on the economy or the industries, bank should get the first benefit out of the trend in the positive side. So if you want to bet it again, if you see as Sir said with respect to touching the 200 EMA and then bouncing back, I think bank should be the first sector should be focused and buy on.
I think Sakshi, I'm not sure whether I should use the word fruitless, but that's the exercise that we are trying to do in trying to find out which will be the first to sort of bounce back. अभी पहले गिरना तो बंद हो. What we are facing, ladies and gentlemen, is सच कह रहा हूँ, I'm so sorry to be a spanner in the wheels or kebab mein haddi, but that's how it is. Like I said, the test of 23 500 200 DMA has happened, and you see that short covering that is coming in. Low was 23. One second, what was the low? 23. 1 second.
23 545.
Okay.
545, correct. So that's exactly the 200-day DMA that has been tested, and let us see what will happen in the next 35 minutes, because now a lot of people will cover their shorts, and you will see a short covering happening. So one very, very good exercise in complete, how should I say, just tracking will be to look at the 23 500 call on the Nifty, which will be expiring on 14+7 November 21. I'll just try and get that for you. We will try and look at it on the upper side. Allow me a minute, Sakshi.
Sure. Okay, meanwhile, Prashant, if we look at the current setup in the markets, the Nifty is down 10% from its peak, as we have discussed. Sensex is weaker by 8,000 points in less than 2 months. Of course, when we see individual investors' portfolios, they are already showing a bear market kind of a move, because at least 900 stocks above 1,000 crore rupees of market cap are down at least 20%. So a lot of stocks under the surface are already in the bear phase. How about the index? Beyond this 10% downtick, do you really expect or see or fear that a bear market condition could develop?
there are a bit of possibility we can end up going into a bear market, but again at 10%, we just made 10% today, and today's closing is most important. Again, it should be above the 200 DMI. If closes below 200 DMI, again there may be a technical algo based selling pressure tomorrow in the market. So that will again take markets to 11% or 12% from the high. So overall, I think this next support will be around 23,300 levels. That should be a focused support for markets, even though if it is below the 200 DMA average. But that should be a make or break level. If not, then again we are going to go back beyond the 23,000 and below. So overall, the trend and sentiments both are negative. As sir said, selling to band ho jaye first. So that is the biggest question everybody is looking for. So FIS numbers will be highly tracked. The way the day when the numbers are very much low, like 500,000 crores, then I think markets will be seeing at near to bottom.
Sakshi, the same memes are resurfacing. सूर्यास्त में अभी कितना टाइम है, and I have the 23,500. Okay, 23,500 Nifty call expiring on 21st November, ladies and gentlemen, is at 242 rupees. Let's see how it goes. One second, let me just draw a chart on this one and take a view. Prashant, are you looking at it?
Yeah, I'm watching it.
Okay. Any views on this one?
Looks like very risky for me again. I think as on date, I am with the open 0 calls.
Okay, no issues, absolutely, no worries at all. This is what it is, ladies and gentlemen, right there in front of you. Again, I must say that it has fallen almost 200 rupees today. So it's halved by about 50%, and one must be really careful. But you will see a dead cat bounce on the Nifty and the Bank Nifty today. Let's hope it comes sooner than later, and that will also be sold into. That's how markets are. And Sakshi, you remember there was this feeling of being left out,
Yeah.
feeling of action being missed, FOMO. Now there is a new term that has come into the market. It's called JOMO. JOMO is joy of missing out.
Yeah, I'm glad that I'm not a part of in this
You're
market.
laughing at me.
Okay.
I'm telling you such interesting things in life.
I'm
You're
sure,
laughing at me.
Shell, starting Monday,
But,
you are going to be in the JOMO mode for about 15 days, and this is where
Yes.
both Prashant and I and several other market experts, they will. I'm sure to catch you, Shell. But in case there is a huge deep down correction, I will send you a Zoom link and have you join from Europe to talk about Indian markets.
You are going to get me divorced. Don't do that.
Oh God.
पता चला एफिल टावर से लिंक कर रहे हैं.
No. Oh God, that will be fantastic.
Anyway.
But yeah.
Our boss will be very happy.
Yes.
Prashant ji, our boss will be very happy if I do a link from Eiffel Tower, but he will have to pay the lawyer's bill, which I don't want him to pay. Okay, ladies and gentlemen, the 200 DMA has also gone.
Yes.
Okay, now what is next? Let me just Sakshi send you a very interesting chart which I got made just a couple of minutes ago, and did I send it to you? No, one second. Forward. This goes to Sakshi. This is a 75-minute chart on the Nifty, Sakshi, and अरे भाई एक सेकेंड. अभी क्या करें, अपन तो यही जानते हैं. So Sakshi, it's there with you, and so now what is next? Let me tell you. I'll also read the same chart. 23,590 has been taken out.
Yeah.
Okay, so we are now going to see a test of the pink and the blue line.
Yeah.
And the pink and the blue line, ladies and gentlemen, is what? 1 second.
Two, 3, 3, 4, 0, I believe.
Okay, that's with you, and that's how it is, ladies and gentlemen. Nothing much that can be done, but that is what we are looking at in terms of selling pressure. 23,544. Let's see whether on a closing level the bulls take back 23,535. The close should ideally be above 23,600, but I'm not very hopeful, Sakshi.
Okay. Well, Prashant, we'll leave you at that, and thank you for being with us to help us navigate through this painful day thus far. We hope we are able to find some base, as Gaurang was mentioning in the morning, that let this be a base building exercise for the Nifty, and that's what we are hoping that at least it turns out to be, rather than a free fall that we have been witnessing for so many days for now. Alright viewers, what we'll do is we will get on board Swati Hotkar now. She is the AVP of Technical Research at Nirmal Bang. Swati, welcome. Good to have you with us. The markets are just falling like 9 pins. There is no the kind of a base that one can really look at right now. 23,527. Let's hope at least 23,500 stays for today, but we are half an hour away, and things are getting worse by the minute. How are you looking at the market setup right now for both Nifty and Nifty Bank?
The overall the setup doesn't look that much positive or promising, that from where we will witness some sort of a reversal sign. Nifty has already touched its 200 DMA and it's trading below that level as well. Now today's closing will play a very important role, at least for 1 to 2 trading sessions. On the bank Nifty front, we need more, we can see more 3 to 400 points correction to get to touch the feet of a 200-day moving average, which indicates that the Nifty might test, if it's break 23,500 levels, then we might test the lower levels towards 23,200 or 300 levels to that level, because it's a tendency of a market on that particular day. It will not respect that particular average levels. It will trigger the stop losses of declines, and again it will make a new low. Then we will see some very good bounce back of rally. So as of now, I believe that more 100-200 points downfall can be seen into the market, and upside rally can be resumed only if the Nifty manages to give the breakout of 23,740 levels. That is the retracements levels, resistance levels. If it manages to give the breakout of that level, then only we can witness some sort of a fresh buying can be seen into the market, which might take a Nifty back towards to 24,000, 24,200 levels on the high side. So as of now, the view is little bit cautious. Just wait and watch policies should be applied. Any dips towards to 23,300, 23,200 can be utilized as to take the fresh buy long positions. At the current market price, we can't give a fresh long as well as a short positions. We need to keep a eye on the for at least 2 to 2 trading sessions on the closing basis.
$23,500 for you, ladies and gentlemen, on the Nifty, and now this is getting to be beyond painful. 50,000 has disappeared on the Nifty Bank. It is now down 1,200 points. 49,900 is also the 200-day DMA of the Nifty Bank, and this is getting worse and worse. Let's look at the other indices. How about the mid cap space? I saw a very painful 2.5 percentage point. Okay, Nifty mid cap is 3% lower. Nifty small cap is 3.1% lower, and of course you have the Nifty 500 down 2.1%. Sakshi, the advanced decline ratio is 1:10. 230 stocks in the green versus 2100 stocks, 2150 stocks in the red. So for every one share that is up on Dalal Street, ladies and gentlemen, there are 10 that are in the red. Swati, you need to rustle up some lady luck for the markets to bounce from 200-day DMA.
Yeah, as of now, we are not concentrating on the 200 DMA only, but definitely more selling pressure can be witnessed into it. If you're looking for a buying purpose, I will suggest to go for the IT pack because those counters are really has not going to do very well in the future, such as the Coforge Limited looks very good because the daily setup is very strong. I believe that this particular counter is trading in upward rising channel. So this particular stock, if you're getting any dips towards to 8,000 or 7,900, can be utilized to take a long positions. Currently, the counter is trading as 8,050. So this is the counter which looks promising on the technical front. On the technical setup, I'm looking for a target of 8,200 rupees on the downside. So this is the good counter I'm looking to take a buy call at the current market price as well.
Okay, got that. IT is down by 0.5%, but there are several indices that are down by over 1, 2 and over 3%. Real estate index is down 3.5%. It's the one that is facing the maximum downtick today. PSU banks are down by 3.3%. Mid and small caps, as Shell has pointed, about 3% each. Metals are down nearly 3% too. Autos down 2.3%. Oil and gas down by 2%. Pharma index down by 1.8% as well. That's the overall picture. Even the PSE index, the public sector enterprises index, is down by 1.8%, barring NTPC. Rest, most of the stocks are actually down sharply in trade. But it's Swiggy that's rising further up, 16% higher right now for Swiggy. And you never know if you actually see a 20% uptick on this one on day one itself. 451 right now for Swiggy. And remember, in the morning we were talking about how there were varied targets coming in for Swiggy, which was baffling a lot of investors, whether it was 370 or 470 on the upside. So there was a wide range. Day's high on day one, Swiggy IPO shines bright amidst all this gloom in the markets clearly. So it seems like what Shell was pointing out could have been that money moving out from the secondary markets into the primary market, into Swiggy specifically, right there in front of us. Swati, have you invested in Swiggy?
No, Sakshi, I have not invested.
Okay, got that. So that's the kind of day one move that we have on Swiggy. Let's see how it goes. Yes, Shell.
On Swiggy and Zomato, you remember that old ad of Vodafone, which is you and me, what was that? You and I in this beautiful world.
Whole world, yeah.
Let me just send it to you.
That there was a pug in that ad.
There you have it. We are making these discussions. Yes, exactly. We are having such discussions, ladies and gentlemen, because we have nothing concrete to offer to you in terms of how should I say, what to do. But I will be looking at SBI Nifty ETF again and make a decent allocation at 200-day DMA. This is something I have done repeatedly, and let us see how it pays off, and it's worked wonderfully. Sakshi, did you get the ad?
Yes, and I saw how Zomato has welcomed Swiggy on this beautiful line as well on their debut.
Wonderful. I can assure you, ladies and gentlemen, at 3:30 p.m. the selling will stop. I have just got this from very high ups, but till that point of time, I'm hoping that 23,550 will be held, and that's the 200-day DMA. Normally, what we have seen, Sakshi, that markets bounce from 200-day DMA, maybe 400, 500 points rally, 300 points rally on the Nifty, 1,000-point rally on the Bank Nifty, and then again the selling pressure takes it lower. But for the moment, I think enough and more pain has been held by the market, and it's time for a bit of a rejig on the mojo. I will again visit the 23,500 Nifty call that we had discussed at what was that, 242 rupees. Let me see how it is going. Swati maybe having a view on that one. November 21st, 23,500 call still at about 233. Okay, just keep an eye out. It's just a mathematical exercise that we are doing. Let's see how it goes. But for the moment, Sakshi, we have still 18 minutes to go.
Absolutely, but like you pointed out, we hope that this carnage really stops. Swati, is there anything in the markets which appears on the buy list despite this kind of a carnage playing out?
Yeah, on the buy list, as I suggested, Coforge is the one counter. If you're looking at the counter on the banking sector as such, SBI looks good because it has already tested the 200-day moving average. Today, it has almost means nearby its 50 days moving average. Below that level, we can see the 200 DMA, which comes to at around 800 levels. Today, the intraday market has almost tested 804. If you're looking for a quality counter, definitely SBI will be look promising at the current market price, because there is a multiple bottoms has been formed in the nearby 800 level. So this is the current risk reward ratio will be a very favorable to take a long positions. Upside, I can see if you are getting any relief sign on the higher side or pullback, bounce back rally, target can be seen up to the 840 levels on the upside. So one can take a long position at the current market price as well on the SBI.
Okay, got it. So apart from Coforge, it's SBI on the buying side right there. NBCC has come out with its numbers. Let's look at that one. Consolidated profit has risen from 80 crores last year same quarter to 122 odd crore rupees. That's the bottom line for you. It's improved substantially for the company. The consolidated revenue has also seen an improvement, and you could actually see that the stock that the company has seen a 2,459 odd crore rupees revenue this quarter versus 2,059 odd crore rupees as consolidated revenues that was recorded last year same quarter. So both on the top line and the bottom line, things have improved. You can actually see that last tick which has improved for the company right on the earnings front, but the stock is still hovering about 3.5% lower in trade. Swati, could you look at NBCC? Margins have also improved from 4.6% to 5.1% year on year. How would NBCC really looking to you, although we have actually seen the entire PSU space cracking a lot in this last 5 weeks of a sell-off?
My view, Sakshi, is little bit cautious to negative. Why such? Because from the last almost one and a half year, we have seen a very spectacular rally in this particular counter. Because whenever the stock has given the breakout of 40 levels, we have seen the upstretch rally towards to 120. Now, after such kind of a rally, we cannot deny the profit booking, which we are witnessing from the last almost 3 months. Now, the current level, I believe that the immediate support level lies at 85 levels. So that will act as a very crucial support level. If it's break that level, more downfall can be seen up to the 80 levels. So I believe that more 10 points of corrections can be seen into this particular counter. Long positions are avoided at the current market price. If you are getting any dips towards 280, one can wait and watch policy should be applied. And if you are getting any reversal back towards 284 rupees, then one can enter for a long position, but not at the current market price.
What's really interesting at this point of time, Sakshi, is we've completely forgotten to point out that Friday is a holiday. And it just
one less day of pain.
And therefore, that's the yes, well yes, but that's the possible reason for this very sharp move in options data is what I'm trying to say. But because you just might see some kind of short covering really taking root on the market. Look at the Nifty now, 23,570. I am not advocating anything at all, but that's how it is. And the Nifty call that we had highlighted is now at 250, 255 is what I am seeing. Let's see how it goes. Keep an eye out on this one. And we still have 13 minutes to go. This is the short covering that I'm talking about, that people who have made a lot of money on an intraday basis now want to take it home, because tomorrow is the weekly expiry of the Nifty, Sakshi. So you have 2 days of 300 point falls, 600 points in a span of 2 sessions. That needs to be squared up, and therefore you will see some momentum coming into this one, the 23,500 call on Nifty expiring on 21st of November. Please keep an eye out on this one.
Absolutely. Well, 318 right now. Swati, how about any STBT, BTST trades that you could highlight for all our viewers?
Sure. M6 looks weak at the current market price, even though the market has, this particular counter has really performed very well. Today it has given the breakdown of the 50 days moving average, which gives some sort of a cautious sign. And I believe we might witness some sort of a profit booking in this particular counter. The counter is trading at 59.50. One can go for a short at the current market price. I'm looking for a target of at least 58.50, 100 points on the downside. By keeping a stop loss of 6,000 levels, one can go for a short. Another counter looks positive, looks very good for the short position is the DB slab. Why I'm saying that, because this counter has just shown the negative divergence on the daily charts, and also the interesting fact that it has given the breakdown of the short-term moving averages, say the 20 DMA, and the RSI is showing a negative crossover from the overbought zone, which all the 3 parameters are very good for the short selling or say the profit booking. So we might witness some sell-off in the DB slab also. Currently the counter is trading at 57.70. One can go for a short by keeping a strict stop loss of 58.50 on a upside, and target I'm looking for at least 56.20 levels on the downside. So these are the 2 counters one can go for a short positions at the current market price.
Fair point. That's a good thought process that Swati is sharing with us. 23,580, Sakshi. I don't know why we have a feeling that 23,600 or above will what the close will be. Let's hope for the best, but again very little in terms of what we can hope to offer to our viewers, except for the fact that Swiggy is doing a great job. Maybe they should offer free food delivery to all those guys who have invested in their IPO, and that would be a good thank you from their side. But you were saying 20%, right? It's 18%. Yeah. We'll give it as 20, Sakshi. The high was 463 and 390. Okay, so 390 into 20% plus equals 468. We've seen 463. We'll give 5 rupees. It doesn't matter. That's how it is. And what else is interesting? I wish I could say something of consequence apart from Swiggy. PPL Pharma, fresh record high. KNR Construction, any all-time highs today? Yes. These are the names that I'd rather not take on air. So we'll stay away from them. Any new highs? No, not this one. I'll keep quiet on this one. No. Hykel maybe. Hykel Chemicals. 385, 0.2% higher. That's about it, Sakshi. And the call that we had discussed is now at 262 rupees, ladies and gentlemen. Once it rises above 269, then you will have a blast on that one. We showed it to you at 240. I'm just requesting the PCR to again fire it. The November 21, 23,500 Nifty call, which we picked up at 242 as a mathematical exercise, is now at 262. So Sakshi, in a span of 10 minutes, 20 rupees have been made on a base of 242, and this will get better and better. Let's see how the next 9 minutes pan out. Yours.
Right. You were talking about Hikal, and then there is this Wockhardt pharma share also that's actually doing well in this weak setup of the market,
Yes,
half odd
correct.
percent higher. And this is after the company's reported its earnings today. Remember, viewers, it's reported narrowing of losses, improved earnings in second quarter, reflecting a stronger revenue performance and wider operating margins. The net loss has stood at 16 crores for the quarter ended September. It's a marked improvement from a 73 crore loss recorded in the same period last year. Revenue has climbed by 7.5% to 809 crores. Operating EBITDA has also seen a robust boost, rising 52.8% to 110 crores. Margins have expanded to 13.6%, signaling a more efficient cost structure and improved profitability as well. There you have it. Let's look at the chart performance of Wockhardt, at least in the last 6 months and last 3 months as well. We've actually seen the stock do very well. Let's see, last 6 months it's a 118% surge for Wockhardt Pharma. Wonderful move that's coming in for this one. Last 3 months, 26% surge has come in. Swati, look at Wockhardt and tell us what is next for this one.
Actually, definitely, the Voca chart looks very promising, very bullish on the quarterly exit. This quarter, we have given stock has given the almost 20% returns. No wonder short selling can be seen or on the low side, but 1120 will act as a very crucial support level. So as long as the stock sustains above that level, yes, more upside can be seen back towards to 1300 or 1500 on the higher side. So stock is trading in the upward rising channel. So the overall technical setup is definitely positive. We are likely to witness a more buying in this particular counters, which may lead a counter towards to 1300. So one should hold the long position as long as 1120 levels are respected on the downside.
323, ladies and gentlemen. All those people who are always hesitant to pay the packet that Swiggy and Zomato charge to get the food on your doorstep will now be investing in both these counters. Let us see what Zomato does today. As they say, आज का दिन आपका था, कल का देखते हैं किसका होगा. Almost 4,500 crores worth of stocks, shares that have been traded on Zomato, and I can't take my eye away from the Nifty 23,500 call expiring November 21st. It's now at 266. I'm just waiting for it to cross 268, and then you will see a very sharp move. And Sakshi, we have 23,600. कुछ और मांगा होता भगवान से तो आज वो मिल जाता.
Yes, 23,600 is with us. Swati, do you think the worst is behind us, or is there more to go? At least short covering has happened. Will this further convert into a continuation of a sustained upward trend or recovery tomorrow?
Yes, actually, as of now, for today intraday purpose, definitely the index has respected the 2200 DMA. But if I compare this chart compared with the Bank Nifty, then more downfall is likely to be seen on the Bank Nifty front. If the Bank Nifty continues to fall in this manner, then definitely Nifty will also come down. But on the today's closing basis, yes, we might witness some sort of a bounce back rally, which cannot be denied after such 2 days of such kind of a fall. So upward rally can be extended towards to 24,000 and 24,200. Up to that level, we can witness some bounce back rally. But those bounce back rally can be a short-lived. Overall, as of now, the trend is definitely weak on the Nifty part. So this kind of a rally can be utilized for the trading perspective, but keep all the long positions with the tight stop losses so that the loss cannot be faced on a huge amount as such.
Okay, fair enough. 326, 23,615. It's building on its gains right now above 23,600 on the markets right there. And we are actually seeing things improve for the better, but sectorally it's still weak. Only the losses are getting reduced from the deepest downtick that we saw today, but some more stocks that have added into the winning space as far as the Nifty is concerned beyond 3. Britannia is the top mover, half odd percent higher. Tata Motors is coming up, 787.3% higher. HUL, Wipro, Infosys, Asian Paints, these are the ones that are on a recovery path, and so is NTPC. Tata Motors for you, Swati, how will you look at it?
The Tata Motors, we have already seen a very strong sell-off in this particular counter. As of now, the current list stock is trading near the oversold zone levels. So, अभी selling pressure थोड़ा कम होते हुए नजर आएगा. Downside is very limited. 750, 740 is the maximum level we can see on the downside. So, at the current level, definitely one should go for a long position. This is the one of the quality counter one should have in their portfolio. So, we might witness some good bounce back rally towards to 840 to at least 880 levels on the higher side. So yes, I am expecting some bounce back rally in this particular stock.
Right, ladies and gentlemen, 276 is where the Nifty 21 November 2024 23,500 call is. This is turning out to be a great spot. 3 minutes more into trade, let's see how it goes. Once it breaks 344, which most likely it will do tomorrow, you will see a nice bout of short covering. Let's start wrapping it up, ladies and gentlemen. Not a great day for the markets. The 200 DMA has been breached intraday. Let us see how long does this dead cat bounce last. You have 271 points down on the Nifty. More than 1200 points on Nifty Bank on its last weekly expiry were lost, ladies and gentlemen. That has also tested its 200-day DMA, and across the board there is very heavy selling pressure, whether it's mid caps or small caps, whether it's the broader NSE 500, whether it's sectoral indices. Yesterday's inflation print of 6.21%, highest since August 2023, has put paid to all hopes of a potential rate cut 2 months down the time by the RBI, and that has strengthened bears across the board on the Lal Street. Every single index that we track among the 19 that are there have lost ground, and all that you see is pain and pain on Wall Street.
Absolutely. Well, Swati, anything that you'd like to highlight before you go for tomorrow's trade? Any safe haven within the markets that one should stick with?
Yes, definitely one should be stick with the stock specific trading. No wonder today we are getting some kind of a bounce back rally on the closing basis. But today's opening and the closing will play a very crucial role, because we are at the stage we are getting a 3 days off into the market. So Monday it will be a definitely gap up or gap down opening kind of scene we might witness. So at the current level, avoid major short positions, but definitely one can take a risk of a buying, but very with a very strict stop losses. Stock specific trading are recommended into the market.
Okay, right there, Swati. Thank you so much for being with us to navigate this painful day for all our viewers with all that smile and composure that you come up with. Thank you so much for being with us. Always a pleasure to host you. 23,600. I hope it stays flat. We are at 330. Yes, 23,600 is where we have stopped at today, 282 points. Remember, we went closer to that 23,500 mark and recovered about 80, 90 odd points in trade just within the last 5 minutes of trade, investors and viewers. 1.1% loss for the Nifty 282, Nifty Bank at 50,290. 867 points lower in trade, a 1.7% loss. All the sectors have lost ground. PSU banks lose 2.7%, the biggest losing index right there. Realty recovered some of the losses. It ended with 2.7% losses. Small caps down 2.7%, metals down 2.5%, autos, oil and gas also remain weak by over nearly 2% as well. Top movers on the Nifty, Britannia, Grasim, Tata Motors, Asian Paints and NTPC. On the lower side, you have Hero Moto that's dropped about 4.2%. Hindalco down 3.5%. M&M, Tata Steel, Eicher Motors and Adani Ports as among those that were down by over 3% as well. F&O movers, on the positive side, you had Alchem Labs, Zydus Life, Mannapuram and Godrej Consumer Products along with Havells. While on the lower side, you did have stocks like Gujarat Narmada Valley Fertilizers down 7.6% in F&O, Metropolis Healthcare down 6%, Chambal Fertilizers, Apollo Hospitals, Cummins, Granules, Mahanagar Gas as among those stocks that were down in trade. We leave you at that, viewers, and with the hope that okay, so the markets have settled. In fact, it's not to 23,600, 23,559 as the closing tick right there, 1.36% lower. We'll leave it at that. Stay tuned with us on Business Today Television. In case you are invested in markets, you definitely need an expert opinion at this point in time. So stay tuned. There'll be a whole host of market masters' voices that will explain to you how to read the current sharp fall in the market. Stay tuned. Thank you so much. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition. Our focus is on Bank of India's Q2 numbers. It's a reported strong set of numbers on the bottom line, a 63% or a year-on-year jump in net profit to 2,374 odd crores. This was backed by a 49% surge in the non-interest income as well. Remember, the NII has also expanded by 4% year-on-year to 5,986 crores in Q2. This is as compared to 5,740 crores in the same quarter last year. What we have also however seen is that the NIM has declined to 2.82% as compared to 3.08% in Q2 of FY24. The asset quality profile, however, has improved. On the gross NPA level, it's declined to 4.4% from 5.8% a year ago. And what we've also seen is that the net NPA has declined to, from about 1.54% in the September quarter of 2024, whereas it has now come to 0.94% in September of 2024 as well. Let's get to understand the key driving factors for this quarterly earnings and the outlook going forward. Mr. Rajneesh Karnatak, the MD and the CEO of Bank of India, is now with us on the show. Warm welcome to you, sir. Thank you so much for taking the time out. Congratulations on the strong bottom line growth that you have reported in Q2. Do tell us any 2 or 3 key factors that you believe have been behind the strong showing, and will these factors continue for the rest of FY25 as well?